Ever wonder why your car insurance bill keeps climbing, even with a perfect driving record? You haven't bought a new car, you haven't moved, and you've never had an accident, yet that premium just jumped again. You're not alone. Every driver in America is asking the same question. Today, we're pulling back the curtain to expose the real reasons why your auto insurance is skyrocketing, and more importantly, what you can actually do about it before your next renewal notice hits your inbox. Let's start with the hard numbers. According to the Insurance Information Institute, the average U.S. auto premium has climbed nearly 17% in the last year alone. That's one of the biggest spikes we've seen in 2 decades. And if you live in states like California, Florida, or Texas, you might be seeing jumps closer to 25% in some areas. The most frustrating part, many of these hikes are hitting drivers who have never even filed a claim. So what's really going on? It's not just about corporate greed. There are 5 powerful, interconnected factors quietly reshaping how car insurance is priced in America. First up, the repair cost explosion. Your modern car isn't just a machine anymore. It's a rolling supercomputer. The average vehicle today has over 30 onboard sensors, complex radar systems, and computer modules controlling everything from parking to emergency braking. Remember when a small fender bender cost a few $100s to fix? Now, that same minor accident can easily run over $3,000 because that cracked bumper is unjust plasticate, houses, cameras, LiDAR, and collision detection chips. As repair costs go up, insurance payouts go up, and your premium follows that same steep curve. Regardless of your personal driving history, the second driver is a double whammy: labor shortages and inflation. Body shops across the country are facing a severe shortage of skilled technicians. Since the pandemic, thousands of experienced mechanics have left the workforce, and not enough new talent is coming in to replace them. The result? Repairs take longer, parts are on back order for weeks, and labor costs have shot up more than 20% since 2022. When insurance companies have to pay more, for every single claim, they pass those increased costs directly back to you, the customer. Factor number 3, climate disasters and extreme weather. If you live in a state hit by floods, massive hailstorms, or hurricanes, your insurance bill is already telling this story. In 2024, the U.S. saw a record-breaking $92 billion in weather-related insurance losses for homes and autos. From hail-damaged cars in Texas to flooded vehicles in Florida, insurers are paying out more than ever before. When these catastrophic events become the new normal, companies don't just raise rates in the disaster zones. They spread the financial risk across their entire customer base. So, even if you live hundreds of miles away, you're still helping to pay for climate volatility. Now for factor 4, and it's a big one: the data revolution. In the past, your insurance rate was based on simple things like your age, driving record, and zip code. Not anymore. In 2025, the game has completely changed. Insurance companies now use sophisticated AI-driven algorithms that analyze hundreds of data points. They look at where you park, how aggressively you brake, and even what time of day you typically drive. If you're frequently driving late at night, using routes known for rideshare traffic, or live near a high-accident intersection, the algorithm silently flags you as a higher risk. It's not personal. It's pure data. But it means your rate can rise without you ever getting a ticket or having an accident. This shift toward data-based behavioral pricing is one of the most significant and controversial trends in the industry right now. Finally, factor 5, the legal and medical ripple effect. This is another hidden cost driver that's having a huge impact. After any accident, even a minor one, medical costs are through the roof. The average cost for a bodily injury claim has nearly doubled since 2018. When you add the rise in expensive legal settlements and pain and suffering lawsuits to that, insurers are losing money on claims faster than ever. So, once again, premiums rise for everyone, not because you did something wrong, but because the overall cost of accidents in the system has gone up, and that loss is spread across millions of policyholders. So, with all these forces working against you, what can you, the average driver, actually do about it? Don't worry, you're not powerless. Here are 5 smart steps you can take right now to protect your wallet. First, always shop around. Get at least 3 different quotes before you renew. Loyalty doesn't always pay. Second, Ask about telematics discounts. These safe driving apps can cut your premium by up to 20%. Third, consider raising your deductible. Slightly higher deductible can lead to big savings on your premium. Fourth, bundle your policies. Combining your home and auto insurance can often get you a 10 to 15% discount. And fifth, keep your credit score healthy. Yes, in most states, insurers still use it as a factor in setting your rate. The truth is, this isn't about one company or one state. It's a massive chain reaction of technology, whether lawsuits and data, that's reshaping the cost of driving in America. Auto insurance is becoming smarter, but also a lot more expensive. Understanding the why behind these changes is your best defense, because the more you know, the less you'll pay for the exact same protection. Thanks for watching. If you found this helpful, give us a thumbs up and hit that subscribe button for more insights. Drive safe out there.